Hey, it's Clay at claytrader.com. This will be my top 10 stocks as we head into Tuesday, March 8th. This will be a technical analysis breakdown. So if you're someone that uses charts within your trading, or maybe you're just interested in learning more about charts and how they can be used to help make good decisions as a trader, this will be a video for you. Before I get to the watch list, I first just want to personally invite you to get signed up for this free live online class that I'm offering later on in the week. So if you're liking what you see as I go through the video and you want to learn more about this tool, how it can and should be used to, build consistency as a trader to get better results, then certainly get signed up for the free class. If you're watching on YouTube, there's a link down in the description box. If you're watching at my site, then there's an area right there on the webpage you can click on. So keep that in mind, and hopefully I'll see you on Thursday. Now, before I get to the watch list, a couple quick clarification points here. First off, you're not crazy. You're not seeing things. That number right there is still moving around. The candle is still moving because the market's going to be open here for a little bit of time. But I like to do these videos when the market's still open because sometimes we can capture some really interesting late day action. And then also I'll be using the 30-minute time frame. So for you beginners out there, what that means is that each one of these candlesticks, as they're called, represents 30 minutes worth of time. So first one here, ticker symbol CEI. Talked about this last week, and my main point was, hey, something was going on. Was it the start of something bigger? Especially CEI's got a track record of moving pretty quick, pretty big from several months ago. And yeah, that late day movement on Friday, which you can see right there, was indeed the start of something much bigger. And that's the idea of a watch list is, hey, could this be the start? Let's at least watch it so the people that were watching notice the gap up. And then from there, never really looked back at it as it made a huge move and is now starting to pull back here. So actually, let me get these lines out of the way as they've served their purpose now. But the nice thing about the current pullback is, now it doesn't guarantee anything, but it does at least alleviate the worry of, I don't know, am I going to be the sucker that buys the top? Am I suffering from FOMO, fear of missing out? And you have that worry has been alleviated, right? The people that were, buying the top and suffered from FOMO, they were all buying up around there. Now, again, that doesn't mean that it's still going to be a winning trade, but it does mean that at least that has been removed from the equation. But overall, right now, you can see that there's a nice pullback here underway, which is, what gives us the top part of this pattern and resistance portion. But at the same time, is now giving us the bottom part. Let me try. There we go, of the pattern right here. So let me change this to green to represent more so the bullish attribute of things. And then let's just make this all one color to make the pattern a bit easier to see. So again, we have our resistance there. We have our support here. We have the big momentum move right there. And for you pattern players out there, I'm about to call this a bull flag pattern. So if you do like to play bull flag patterns, especially in this price range down around the sub $2 range, then this one should definitely be on the watch list for Tuesday. Next one, MULN, and I really like this one for a simple reason. I'm going to go ahead and get rid of that line. And that reason is right here at $1.20. Why is $1.20? Why is that level stand out quite a bit? Well, if we go through the history of things, you can see it has rejected the price, and then once again today rejected the price. And I assure you a bunch of people have noticed that, but that's the exact reason why. So I'm not trying to come across like this is a great talent that I have or this is some sort of great secret discovery. The exact opposite. I assure you that people all around the world have noticed how stubborn $1.20 has been. So while that does not guarantee anything, it does make it plausible. It does make it valid to think that if the price can recover back up to that area and get the break up through it, that break in and of itself could create a bunch of upside buying pressure. Again, even if it's just because people are buying, well, hey, I'm a breakout player. Hey, this is breaking out. Oh, I'm supposed to buy. I'm going to buy. So again, even if it's a self-fulfilling prophecy, those definitely exist in the market. And in my mind, that $1.20 mark level stands out quite a bit. So for that reason alone is why, in my opinion, at least, if you like to play this price range, it belongs on your watch list. Next one, IMPP, and the monsterness just continues. Monsterness, I think I just made up that word, but talked about this last week and have been talking about this since this thing was, not to toot my own horn, but this one first showed up on the watch list when this thing was still down below $1. And again, I'm not asking you to trust me on that because I could just be a random stranger. But that's the cool thing about YouTube, right? It documents everything. So if you really don't believe me, just go back in the video archive and you'll see that. But if you do believe me, hopefully you do, then let's just move on to what's relevant at this point. And just like MULN, the main reason here is all about the pattern, and more specifically the breakout part of the pattern, which has now been very, very clearly defined as right up here around, let's just call it $8.25. So once again, by no means am I trying to imply that this $8.25 mark is a great discovery on my part. A lot of people have noticed that because it's the top part of this pattern that exists. So let me get the other part of the pattern into play there. There we go. Once again, change that to green to represent more so the bullish part of the pattern. And then to keep it all one color, So for you pattern players out there, we have our resistance, we have our support, we have our momentum move, and let's put the little golf hole down here to make it more visual. This would be known as a bull pennant pattern. But again, the key thing here is not necessarily the bull pennant, but just how well defined the breakout point is of this pattern up there around 825. So if you like this price range, if you like to play these kind of self-fulfilling prophecy type situations for breakouts, this is one definitely keep an eye on. But just to reiterate, I'm not saying any of this is guaranteed to happen. Just because 825 is broken does not guarantee that the price is going to shoot upwards, but it's certainly not some sort of random area. It's certainly at least a plausible thought process to have. Next one, HUSA, which was probably the just craziest of the day when you think about where it started, where it went. And again, got to be careful on these. You don't want to be the sucker that's buying the top, but maybe that's already happened here. But even right now, still feels a bit too high. Now, maybe I'm going to prove to be very stupid looking on this, and this thing just, continues to rip. But like I said, it started to pull back, which is great, right? So you don't have to worry about being the sucker. Those people that, were buying right there and right there. But to me, it feels like, maybe this thing needs to pull back a bit. But these are certainly tricky, right? Because this is not the normal. It's not like you get a lot of experience looking at stocks that go from, $3 up to $14 in a single day. But like I said, in my opinion, it seems like this thing could potentially pull back some more, which, a level that stands out to me right there around that $8 mark as that former little consolidation area right there. So an area to watch if you like to play more so pullbacks. If you like to play breakouts, then yeah, you could definitely get yourself a trend line and play right here and try to play something like that. And that just depends on personal risk tolerance. But point here being is that HUSA was absolutely bonkers today, so it would make rational sense to at least keep an eye on it and watch it tomorrow, hence its point on the watch list. Next one is AMC, and a very rough day on this. Once more, not because it was red, but because of just how it's completely given up all its gains from this very impressive bounce. So the price reached here, made a fantastic, epic bounce, and then has now essentially officially given everything back. So that was confirmed as simply a dead cat bounce, which also makes this now a very, very important level of support, where the price is currently sitting, as I actually technically speaking, a little bit below it, but within the range of this $15 mark, which again was the low from several days ago, and the price has now slightly moved below there. So the big question mark moving forward here is what's going to happen. To be fair, maybe this is going to be some sort of double bottom pattern where it finds some support and then makes a nice recovery. That is completely valid. Again, not guaranteed. Nothing's guaranteed. But is that is that a plausible thought process to have? It certainly is. It very well could be a double bottom. But you got to remember that that's a two-sided coin, so maybe it's not. And that's why risk management matters, because you got to make sure that you don't get stuck in something where you're thinking, yeah, I think it could be a double bottom bounce, and then it doesn't. And that's okay. Nobody can be right all the time, but you want to make sure that you honor that risk. So $15, like I said, that's going to be the big question mark moving forward. Is this some sort of double bottom move? If it's not, then the next level of support you're going to want to keep a close eye on moving forward is going to be down there at right around $14.65. So in my mind, though, that's going to be the main dynamic. Is it going to double bottom here, or is this just a leading indicator of that much more downside pressure to come? We'll have to see how it plays out. And we have ourselves another crazy one, INDO, which got up into almost $90 today and is now having a very, very nasty pullback. But this is all a matter of perspective. What do I mean by that? Well, it's nasty for those people that chase, suffer from FOMO that were buying up around here. No doubt about it, nasty for them. But if you're someone that likes to play pullbacks within very, very strong uptrending movements, well, then, hey, I could see why you would say, all right, here we go. Here's a buying opportunity. Now, I don't know. Maybe this is the start of a much bigger crash. But the idea here is at least you're not chasing the price. At least you're not buying tops or anything like that. And it goes back to you got to have risk management. But like I said, the pullback here definitely makes this very interesting because there's no doubt about it. Still a lot of momentum here. And now it's just a question of, how much does this thing actually need to pull back? In my mind, that $50 mark, very, very interesting level. Perhaps we're thinking, I'd like to see it come down to that purple line there, the 50-period moving average. I can understand that logic too. This is all where it just boils down to personal risk tolerance, personal strategy. Or maybe you're just looking to play some sort of confirmation resistance, turnaround. So in that situation, I could see getting, a trend line like that in a play and seeing, when it wants to potentially move over there and break through that trend line. But as of right now, there's clearly a lot of downwards pressure to it, so you want to be a little bit more careful in terms of just trying to pick a random spot. You want to, keep an eye on, a couple, point of confirmation, which again could be that resistance line, or it could be a couple of these support levels here. But going back to the whole philosophy of a watch list, clearly there's a bunch of stuff going on with this one, so it's worth at least watching it on Tuesday. Next one, BBBY, which had clearly a very, very more so crazy pre-market than anything else, because after the market officially opened, it just turned out to be some sort of massive gap and trap. And really the only reason why I'm putting this on is because, to be fair, late day, things leveled out. And then very late day, last 30 minutes, you can see here, volume has returned and a nice green candle. So now it becomes a question of, okay, is there going to be another secondary surge back to the upside? So think about, in order for me to ask this question of, okay, is something happening? Well, something needed to first happen in the first place. And again, what happened was the price finally leveled out and the price finally started to, move back upwards. Does that mean that it's for sure something? Well, no, maybe it isn't anything and the price just rolls back over, but it's at least justified now to keep a watch on it because it has started to show some interesting price movement here with the key level resistance that I'd keep an eye on right there at $23. So as I keep saying and will continue to say, because I don't want anybody to get the wrong impression, there are no guarantees, but it's certainly valid to think that if the price can get up to 23 and then push up through it, that break right there could, spur on additional buying and potentially, I'm not going to say necessarily send it up to those highs again, but from a breakout standpoint and from a trading standpoint, still plenty of room there for potential, positive trade plan. But let's see how things play out. But like I said, the interesting thing is things have leveled out, have shown some signs of strength. So let's see if that continues into Tuesday. Next one, VEON. And quite frankly, I don't know how I feel about this one. I'm putting it on the watch list because it continues to show that it's making movements and is trending upwards. But it's certainly a very, very jumpy stock, which I suppose comes with the territory of being a penny stock. But it does remain and continues to get good, solid volume. And I know a lot of people out there, they like to play, this price range. So want to at least keep it on the watch list. But like I said, I'll be the first to admit that it's very jumpy. I mean, we had the big move down, big move up, pullback, gap up, and then a pretty big move down here. But the reason why, like I said, I want to keep it along with those other reasons is it continues from a technical point of view to stay above 35 cents. So it's not like things have completely collapsed. And my definition of, okay, Clay, well, how are you defining completely collapsed? Well, that would be going down to 35 and breaking down below it. Because at that point, you have the price essentially having gone right back to where it was. And when price movements go back to where they started, not exactly a sign of any sort of genuine power. But to be fair, like I said, as volatile as this has been, it has still been able to stay above 35 cents, which is a good sign. So get that out of the way, because now it seems as though the more well-defined level is going to be right up here at the 52 cent area. Going through the history of things, you can see it's rejected the price, and generally speaking, rejected the price there. But also, I mean, that's a pretty big journey now back up to that area there. I think the more intriguing area is, can it go back down to 35 cents and then bounce off it once again like it's done several times? You can see it's just been hovering around this area. So while nothing's guaranteed to bounce, I mean, there's certainly a track record here of it maintaining that area. So in my mind, 35 cents is the more interesting level to watch over the next couple of days. Next one, ticker symbol OP. And like this one, first off, good solid momentum, no doubt about that. But what makes this very interesting is that's a very ugly final 30 minutes. And for you longer time viewers, you've heard me say it before, but there can be opportunity in ugly. So no doubt about it. Is the overall chart ugly? That's a little too overdramatic. But there is this last 30 minutes that is very, very ugly. But it does now just depend on the whole idea of at least you've gotten the pullback. The suckers, I shouldn't say that because maybe they'll still prove to be profitable, but the people that were buying the top that got, I'll go back. When you're suffering from FOMO, that's what FOMO does. It puts you at risk of being the sucker that buys the top. So those people that were suffering from FOMO, they already bought in the top. So you have that potential alleviated, and you do now have that big pullback right there. So it becomes, okay, well, where are some potential areas where it could make sense where this nasty, ugly candle might get a little bit more uglier, then turn things around? And right there around $1 is a very interesting level to me. Maybe even down there, let's see, what is that? The 88 cent mark. So $1.88, very intriguing level where if this thing pulls back to that area, the risk versus reward, in my mind, shifts to be a very logical, point of view. Not a guaranteed point of view, of course, but it makes more sense at this point. So if you do like to play this price range, if you like to play situations where things are ugly, however, it's ugly happening with still a bullish context with a lot of upwards momentum, then this one definitely belongs on the watch list. Next one, TSLA Tesla. And overall, I'm going to go ahead and just get rid of that line. No, I'm still very curious. So I'm just going to go ahead and up update this line so we can continue to watch it over the next coming weeks here. But overall, in more of the near term, this will mean a bit more to those of you that watched the video from Friday. But talked about that near-term trend line there. And you can see the price did such a good job of trying to maintain above there earlier on in the day. And then that 30-minute session showed up, finally pushed down through there. And you can see upon pushing down through it, carried it all the way down to that green line right there. But this is where I was definitely unsure. So I'm not going to sit here and act like I knew that this all was going to happen. But at this point, I was very unsure of, okay, is the price going to bounce there? Is it just going to kind of get choppy and go sideways? But no, I mean, it just went down there, went sideways for a little bit, and then just continued on down. In fact, Tesla basically closed at the low of the day right there. So at this point, it really becomes a question of, well, how bad is this going to get? And of course, nobody knows that. But from a technical point of view, the next very, very intriguing level to watch, which I know I'll be watching as somebody that, tries to trade Tesla routinely, is going to be right down there around 795. Now, if you want to call it 800 because of the round number, I completely would agree with that premise too. But just technically speaking, 795 seems to be a very important level of support. But if the price goes down to 795 and then breaks through there, now all of a sudden you're starting to get into, I'm not going to say full-blown sketchy territory, but you start to get into this territory of, the price having just simply gone back to where it's already been. Again, not exactly below that green line, but the further it goes below that 795 mark, the further and further, the more and more you can make the argument of, wow, this bounce here has completely been wiped away. So that's going to be definitely a key level that a lot of people will be watching. But overall, big old gap and trap here on Tesla, and not just a question of how much more downside pressure is going to show up. Let's see what happens. But I think there's good odds that 795, will be around the corner. So it'll be curious to see how the price behaves at that level. So that wraps up the top 10. Again, if you like what you saw here and you want to learn more about the tool of technical analysis, how it can and should be used to build consistency as a trader, certainly get signed up for the free class later on in the week. Like I said, it'll be Thursday, March 3rd. I just noticed that. Not March 3rd, March 10th. So I apologize for the typo, but March 10th at 7 p.m. Eastern Time. And like I said, if you want to learn more about the tool, then definitely get signed up for it. As far as these top 10 watch lists are concerned, if you enjoy this format, if you would like for me to make more videos like this, then let me know. And you can let me know by doing two easy things. Hit the like button, leave a simple comment, say hi, say thanks. Tell me something that you traded today. Tell me something that you're watching tomorrow. But hitting the like button, leaving a basic comment, communicate to me that you enjoy these. And as long as I know people are enjoying, then I will continue to make them. But again, if you like what you saw here, definitely get signed up for the class, which will be March 10th. Not March 3rd, since that has already happened, but March 10th, and hopefully I'll see you there.